is Savjit Chatterjee recording a weekly session of Chartsarefun. This is for the week of May 25th, the last week of May. We had a shortened week with the Memorial Weekend holiday on the 25th, but in the 4 days, we had an outstanding move in the software sector. And then the semiconductors also continued moving higher. So our Chartsarefun web site, which is our Substack site for our blogs, is chartsarefun.substack.com. We appreciate you subscribing to this channel. And whenever the emails come out in the mornings, you'll get the blog as soon as they come out. Our YouTube channel is our Chartsarefun. We do believe there's tremendous insights in these charts. It can be a lot of fun to analyze these charts. Technical analysis is what we use and we share in this channel. And through our weekly YouTube videos and through our blogs, we share those insights. We don't provide investment advice, so please use these insights only for guiding your investment decisions, but not use as investment advice because we are not registered investment advisors. S&P 500 has been on quite a run, climbing for 9 consecutive weeks. This is since last week of March. We can see this huge climb. We can see that RSI now is hitting a higher high from what we saw in the latter part of 2025, which it indicates momentum. And if you look at 9 weeks of consecutive move, the last time we saw something similar to that was in the early part of 2024. You can see right there a solid move, in fact, late 2023, coming out of the 23 low in October, solid 9 weeks of climb, then 1 week of pullback, and then it continued to climb for at least 12 more weeks before we hit some form of a peak at 52.64 and then pulling back from there to 49.53. Question is, are we going to repeat that as what we saw in late 23 into 24? That's to be seen. MACD so far is beginning to climb higher highs from what we saw towards late 25. RSI has already printed a higher high at 73. So momentum is definitely strong. We know that there is tremendous bullishness now with the IPOs, SpaceX in particular coming out in a couple of weeks, currently planned for June 12th. And then the others, which is the AI stalwarts, OpenAI and Anthropic later this year. So momentum is there. We know that markets got tremendous amount of liquidity coming in, buying up shares of the AI stocks and so on. So we'll see how far this momentum takes us. But right now, 9 consecutive weeks of climb, last seen towards late 2023, 1 week of pullback, and then the climb continued. We don't know yet. We have to see, but it's possible that maybe we get a short pullback and continued climb. Now, looking at software, which is the iShares Software ETF IGV, we had shared this before, a cup and handle pattern from 88.58, pullback to 73.93 to 89.4, then a shallow pullback of the handle to 82, and then the breakout. This cup and handle breakout measured to 104.15 cents. We're not too far from it. We closed near 101.66, another less than $3 or so, and we can get to the 104.15. Look at the extreme volume. It shows tremendous and very bullish move. It's almost 6%, 6.25% move on the Friday. So very, very strong move with a gap breakout. There was some strong earnings. Snowflake in particular triggered the big climb. So we see 2 consecutive days of climb. The Thursday climb was from Snowflake, and then it continued into Friday. We also know that if you look at the longer term chart of IGV, something that happened in 2024 seems to be repeating now. Very similar looking pattern. We had a range bound move from 88 to 76, tested it twice like a double bottom, and then from there it broke out. So that 76 to 88 breakout is about 12 added to 88 is 100, but it went way past it, went to 110. In a similar way, we are climbing past. We already noticed that this week in particular had 8%. This is a weekly chart. This week, software has gone up 8%. We see in the double bottom formation, the second bottom was lower than the previous bottom. The early part of the bottom in February was like 76.25. Then we hit a 73.93. The second bottom was lower, but look at the RSI at a higher low, positive divergence. So positive divergence confirmed this double bottom, and then that breakout above 89 measures 204. We are at a 101. Question is, should we stop at 104 or would it climb up to the 110 level like we had seen in the late 2024? Anything's possible. We got to see what it does. But if you look at the long-term chart of IGV, this is a rising channel. This is kind of looking at a monthly chart. Every candle is a month of trading. If you draw the line across the peaks and a parallel line across the bottoms, we can see that it's a beautiful rising channel. We just scraped the bottom part of the channel and then have started climbing. So if you really say that, well, if the software picks up momentum, remember the AI stocks that are going to come in, OpenAI and Anthropic, are software stocks. So it's going to hit IGV when they do come out later this year. If that adds momentum to software, then this 117 or 118 may not be it. We could see a breakout and a move up to the top end of the channel, which is last we saw back in 2021. And then before that was in the 2008, before we had the financial crisis, kind of a collapse. So perhaps there is a possibility, and that measures all the way up to 200 or so. If you look at this, looking at an exponential chart, and also look at the rate of change over 2 months. This is the ROC over two. In the span of 2 months, look at how much software has moved in the months of April and May. 27%. So that's a pretty sharp move in the software sector in IGV. 27% last seen in that 2020 coming out of a COVID low, and then in the financial crisis last seen at that level of 25% plus. So those two kind of sharp 2-month climbs were last seen there. We may not continue that. We have to see. If you look at the semiconductor iShares, a similar kind of long-term monthly channel, that was actually 73% in the last 2 months, much higher than what we saw in the software. So software, we saw 27% over the last 2 months, because again, rate of change 2 months is in the last 2 months, how much did it climb? Semiconductors went 73% in the last 2 months. And this month in particular, look at the climb, 23%. So while software went up 21% in the month of May, semiconductors had an amazing month of 23%. But if you add the two, 23 is just in the month of May. Sorry, so we just finished May. In the month of April, it had climbed over 50%, because total in the 2 months, we see a 73% climb. So if 23% came in May, then April had a 50% climb. So that's the big move. But the key is, it's rare to see a sector or an ETF break above the long-term rising channel, and semiconductors did. And this shows the power and the momentum on the move of the semiconductors. We can see that the top end of the channel, it broke out, and for 2 consecutive months, it has stayed above that. And look at the RSI on the monthly. That's pretty overbought at 86.9. Similar overbought levels last we saw in the 2021, and then last in the 2017, early 2018. So RSI is overbought. MACD is also hitting overbought, but this rate of change is unsustainable. 73% in 2 months, we haven't seen that. Last we saw in the 20 to 30%, as we see here, into like May or so of 2025, then into late 2023. And then even from the financial crisis, we never hit that high. We hit somewhere around a little north of 20% in those times. So this, just the 2-month rate of change, shows the extreme euphoric buying of semiconductors. And we have to see if this is sustainable. If you look at a shorter term chart of SOXX, though, it is sending signals of a pullback. This is how negative divergences form. You have higher highs in price, but a lower high in RSI. So this is flagging. Potentially, we could see a pullback shape up in the semiconductors in the next few weeks, while money maybe continues to rotate into software. Software has been strong. Maybe we see beneficiary of some of the buying into software while semiconductors pull back. This negative divergence is a warning sign as SOXX keeps climbing, and the negative divergence is not just in RSI, also in MACD, flagging a lower high, just like a lower high in RSI, indicating that we might be near term kind of get pullback. And look at how far it has diverged from its rising 200 period moving average. That's at 335, and it's closed right near 569. So 335 to 569, we're talking about roughly about 234 points or so. from that 335. So 234 points from that 335. That's a pretty big percent move from its 200-day moving average. And that itself, I mean, is an indication that at some point, this extreme bullishness and this extreme overbought nature of this semiconductor industry could see a pullback, and wouldn't be surprised to see it pull back towards a 477 level, as we see from where it pulled higher, 463. So that 465 to 477, as this 50-day moving average climbs over the next few days, could be the place where we could see a pullback. So from that 570 to a 470 or so, a 100-point pullback can be ruled out in the iShares Semiconductor Index. Looking at the QQQ, which is the NASDAQ 100 ETF, this shows us on the hourly chart an ascending triangle pattern. That measured target 722 tested twice, and the breakout from a 695, that's roughly 27 points added to 722 takes us to 749. We closed near 738.31, so another 11 points or so is possible this week, and 749 is where we think the QQQ could head. And maybe this could time with, as that 749 comes, this could time with the software getting towards its 104 target, and maybe once by that time the SOXX gets a topping pattern and starts pulling back near term. A key interest rate indicator of 10-year yield, we have shared this multiple times, which is bearish for the market if yields start climbing, is the 10-year yield had broken out of an inverse head and shoulder. We had shared this before. This is a beautiful left shoulder at 42.05, 44.93. The neckline came in, formed a double bottom kind of a head. It's a very interesting pattern. Usually inverse head and shoulders are one level of the head, one bottom, but this is a double bottom head at 39.47, 39.56. So a double bottom head, and then back to 44.84 at the neckline, a right shoulder pull back to 42.26, pretty close to the left shoulder of 42.05, and that breakout measures to a 50.21, which is 5.22%. We tested 4.68, 46.82, pulled back, and now we are pretty close to testing that 50-period moving average near 4.3839 or so, and 4.4% roughly. And then if this resumes the climb, this could indicate weakness in the small caps, which are extremely interest rate sensitive. So if you look at the Russell 2000 ETF IWM, this is beautiful negative divergence. As Russell has climbing higher highs, look at the RSI. Lower highs, look at the MACD, lower highs, indicating that we might be seeing a pullback in the small caps if the 10-year yield starts climbing, because yields higher is not good for small caps. You can expect to see that pullback in small caps. Finally, a kind of a big cap index, the Dow Jones Industrial, Dow 30 key stocks, is still got some upside with respect to an ascending triangle pattern on its weekly chart. We see a key breakout about 45,000 from a low at 36.6. 36.6 to 45, you're talking about 8,400. At 8,400 to 45, that measures 53,400. We can see it not yet achieve it. We've come close. We are within, what, 51,000 is where we close. So 51 to 53,400 is about 2,400 or so, additional 4% or so is what we think this could climb higher too. But if that kind of pans out in terms of that move, another like from 51,000 to 53,400, that could basically another say 4 or 5% to get there. That could be led by this is a price weighted index, and the biggest component, the biggest holding in the Dow Jones is Goldman Sachs. So if you look at Goldman Sachs, that's an ascending triangle pattern as well. 979, 975, it broke out from it, and the last few days, this is a daily chart, has been climbing. That measured target on this ascending triangle, higher lows, broke out of the key resistance at 975, measures to 1170. We closed near 1025, another 150, 145 points or so is possible on this. And guess who's the largest Wall Street bank that's leading the IPO of SpaceX? Because we know it's almost a $2 trillion valuation of SpaceX when the IPO hits. It's going to have probably, in terms of the number of shares that they're going to list in the IPO, anywhere from 70 to 80 billion or so, just the IPO on the day of the shares that will be made available on the on the float. And that kind of move, because Goldman is the leading bank that's driving that IPO, that euphoria, could give it some upside. So if Goldman begins to climb towards that 1170, also another thing to keep in mind is financial sectors benefit from long-term treasury yields rising. The net interest margin increases, helps these guys. So if the 10-year yield starts climbing, it would help give the financials some upside, and Goldman in particular could then, because of the SpaceX euphoria and all the demand, could see a blockbuster IPO helping its stock. So this is the largest component of Dow Jones Industrial. If it can hit 1170, it can take the Dow Jones Industrial to the 53,400. So with that, just to quickly sum it up, S&P has climbed for 9 consecutive weeks. That doesn't mean we immediately are getting ready for a pullback, because we've had 9 consecutive weeks rise in 2023, late 2023, 1 week of pullback, and continued to climb for 12 more weeks before we got any reasonable pullback. So this is possible. Already RSI is at a higher high than what we've seen the entire last part of last year. It's higher than that. So that shows momentum. MACD is also beginning to climb a higher high. So with the RSI MACD indicating strong momentum in this move in S&P, expect to see additional upside potentially possible with all the momentum of the market. The iShares software 104 is what the cup and handle target is. We are pretty close to that. 101.66 is where it closed. That said, if you look at the weekly chart of IGV, this iShares software, very similar pattern as what we saw in 2024 is repeating now. 2 double bottom at 76, broke out, went from 76 to 110. In a similar way, 2 double bottom at 76, the right bottom being lower at 74. Positive divergence as the second bottom formed, measured at 104, but it could climb just as much to 110 like we saw in the late 24 kind of rally if this momentum on the softwares continue. IGV on the longer term chart has a rising channel. We can see this significant more upside to hit to the top end of the channel. We've had a solid move of 21% just for the month of May. Compared to the semiconductors, it had 23%. So semiconductors still led the gains in the month of May, a little 2% higher, but softwares wasn't a bad gain, 21% in just the month of May. And over the 2 months, software rise 27% was in the 2 months. Semiconductors rose 73%. Huge momentum in the semiconductors. SOXX, if you look at the near-term chart though, negative divergence, kind of a topping pattern near term. We could see a pullback, a 100-point pullback from 570 to somewhere on the 470 level as this 50-period moving average climbs. Can't be ruled out. It's something for us to look into as money maybe rotates from semis into software. QQQ on the hourly chart has an ascending triangle pattern, and maybe another 11 points or so from where it closed, 738 to 749. And maybe then it forms a negative divergence as it reaches 749, a lower high in RSI on that hourly chart. And then we already see MACD kind of flattening out here, and then a pullback towards that retest. In this case, the 50-period moving average is 722, 723. That kind of a pullback can't be ruled out, QQQ, in the next few days. 10-year yield had an inverse head and shoulder that it broke out, measured to 5.22, didn't quite get there, stopped at 4.68, pullback, but testing a key 50-period moving average that's rising. And if it continues its climb, we know Kevin Warsh is going to be holding the next FOMC meeting on June 17th. If there is momentum in terms of any, hawkishness from him, 10-year yields could get a climb higher, and 10-year yield climb higher is negative for small caps. Negative divergence here. Expect a pullback in IWM, the Russell 2000 ETF, as higher highs in price, lower high in RSI, lower high in MACD, indicating a potential pullback is not to be ruled out for small caps. Dow Jones Industrial looks very bullish for additional upside. The ascending triangle pattern measures to 53,400. It closed at 51,000, so another 2,400 or so move in the Dow Jones Industrial, which is a little more than 4% off from where it is now. And in that process, the key leader of the Dow Jones Industrial index is Goldman Sachs because of price. It's a price-weighted index. The largest price stock is Goldman at 1,025. It's got an ascending triangle, nice breakout towards 1170. So another $145 or so move in Goldman can be ruled out to take it from 1,025 to 1170 is where we think Goldman could be. With that, good luck investing. We'll talk to you next week. Thank you for listening.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.